And this video strategy here is actually one that I actually show inside my daily trading system Forex course. Okay, it doesn't really have a name, but here is a template that you can go ahead and use. Okay, and I'll provide this template for you as well, also a value of $67. Okay, and this video here that I'm actually showing you is actually valued at 197 bucks. So there's about $250 worth of value here. Okay, alright, let's move on. Once you've applied the template, and if you don't know how to apply the template to your chart, all you would need to do is, once you've actually gone ahead and actually applied the template, applied the installation to your PC, go to the Programs folder. Okay, excuse my handwriting, Programs, and then go to the MetaTrader, whatever the name is, and inside there you'll see the Templates folder. That's where you want to place the template that I'm going to give you. Okay. You don't need to restart your trading station, not like with with Forex Robot. Sometimes you need to restart your trading station, although there's an alternative way of actually doing it without actually starting up your trading station, but that's not here or there. But once you've gone ahead and put in the template, go ahead and just choose that. Okay, so there's no need to restart the trading station. Alright, the two indicators that we're actually using is, one is called the envelopes and the other one is called the accelerator oscillator. Okay, now we have two upper bands and two lower bands, and I've given them two different colors. Okay, now the idea, what we're basically looking for is that we're looking for a candle. This lower band area here is for buyers and this upper band area is for sells. Okay, so what we are looking for is a blue candle, preferably for a more powerful signal, is a blue candle to actually sit inside those two bands right there, the lower bands. Now, there are two types of strengths of this signal. There's a mediocre kind of one, a little bit weak, and then there's another one which is much stronger. Okay, now this particular bar right there, that particular candle right there, is the one that we need to be looking at. Now, if you're not familiar with Forex, the way that the candles are actually performed is like this. Okay, here is your wick, upper wick, and there's your lower wick, and inside there is called your real body. Okay, now if you're actually seeing the trade going up, then what you'll see is that this area will be the close, and that will be for the bull candles. Okay, and then if you had a sell trade opportunity coming up, you're looking for a red candle, according to my template here. Okay, the close will actually be down the bottom. Alright, so this is for a buy trade opportunity right here, and we're looking for the close to actually close inside the two lower bands. Okay, and as you can see right there where it actually closes. Okay, when you see that the close is actually inside those two lower bands, the next thing we need to take a look at is to see where it lines up with the with the accelerator oscillator. This is the vertical scale, alright, where the perforated dotted dashed line is. Okay, anytime that you see that these green bars come below, give yourself a little bit of a heads up to say, okay, this might not turn out into a profitable trade, or you might not get that so much out of that trade. When you see that the candle, or the bar here on the accelerator oscillator, goes above the vertical scale and it lines up with the close here, then that's a pretty good trade. However, there is a little bit of formula to it, okay, a little bit refining, which I refer to as loss filters. Okay, and I've noticed that a majority of the time, that any time that a bar appears above the vertical scale, the trade has actually turned out to be far more profitable should it actually line up within those two lower bands and the close is actually sitting inside. Okay, now sorry, I've had a little bit of a critique that someone's saying, oh, please stop saying alright and okay and yeah and this, that. So I'm sorry, but it's just the way I talk. I'm just hoping that you can bear with me through that. Alright, okay, I'm doing it again. Okay, okay, moving on. Okay, so yeah, so when you see that the first instance here, that's your first instance, and that qualifies. The next qualifying area, but take note that it needs to actually be within the first bar at the end. Okay, at the end of its session. And I wouldn't actually recommend doing it on the second one, but if you did, just be extra cautious. And also the first bar above the vertical scale, especially for a buy trade, you should really ideally look for very strong signals and only pay attention to the ones that are above the vertical scale. Okay? And once you actually see it lining up with the vertical scale, I mean this one right here actually lines up with this lower one. And if you're into reward and risk ratio and stuff like that, I've actually drawn a black line here just in case for our colorblind people. Just a little heads up here is that my course, my daily trading system, is actually being configured in this particular kind of format to actually help people who might have colorblindness. Alright, so hopefully this black line here will actually be great for them. Alright, so as stop loss, when we see a signal comes in, where do we place a stop loss? Well, you could go ahead and actually look at the second, the previous bar, the candle before the one that we actually get in on, where the signal appears. We could put it there, but I wouldn't advise it because more time often than not you'll probably get closed out. So go ahead and place it 1 pip below the low of the previous low. Okay, now for the take profit target, can be done a couple of ways. You can go ahead and actually target, say, somewhere, somewhere on a previous high, like this. Here's like a previous high around here, so you can go ahead and maybe place it around about there. Get your sort of crosshair tool out so you can kind of work out where those two kind of intersect, and we could probably put it there at sort of at 145.902. Okay, so we can go ahead and put our take profit in there. Our buy entry will be in there, and we go in on the very new bar, on this long blue bar right here, and our stop loss value will be down here. Now let's take a look at the reward to risk ratio on that. Our stop loss value is approximately 39.5 pips, and our take profit target is 57.1. So that's just a little bit over 1-to-1 ratio. Okay, now if you don't necessarily need to have a take profit target in there, alright, suck as much out of the market as you possibly can. Okay, now when you go ahead and take a look at these two upper bands where you can project where you want to actually put your price action, for take profit, when it gets to that level, don't immediately close the trade out. What I would do is move my stop loss and bring it to break even, and or bring it up to the first area of that band, of the inside of that band, that red band right there. Okay, so that way, if the market reverses, you'll always make some money out of it. Alright, and forget about the TP there right for the moment. Alright, what we will do is we'll trail step it. Okay, so once it hits, like say your first band here, you go ahead and move your stop loss value up to, say, maybe book five pips in or something like that, so at least you get your money back from the pip spread that the brokers are actually getting from you. Okay, so book at least something in, and as the market starts to climb, when it goes up to sort of like the upper band here, go ahead and book in half of the profits or something. Okay, and then keep on going up higher. Alright, now what you could alternatively possibly do as well, depending on what type of account that you're using, if you're using like a micro account, you can probably actually split one lot in half, and you can take away half of your profits and let the other profits ride, so you'd be going on at 0.5 lots all the way up, and every time that you go up, say like 30, 40, 50 pips or something like that, depending on what the reward to risk ratio is. In this particular instance it was 57 pips. So when it goes up another 57 pips, move your stop loss up to book in 57 pips and bring it up higher, say maybe around about there, when the market price is up here somewhere. Okay, and then when the market moves up even more, go ahead and take off another half a lot or half of your open position. And then when the market moves up another 57.1 pips, go ahead and move your stop loss up higher. So now you would have booked in 100 pips. Okay, so you've already taken off one over half a lot at 0.5 lots, and then you take off another half a lot at 0.25 lots, and then you've got 0.25 lots riding from here up to there. And keep on doing it, and keep on doing it until you run out of lots to actually cut in half. Yeah? So that's one strategy. Alright, that's one way of going about it. So that's for a buy trade. Let's take a look at a sell trade opportunity. Alright, we've got a candle right here, a red candle. That does not qualify because the close actually comes below that lower band. Okay, here is a red candle. Now, I personally don't like to really look for, really low, small candles. I kind of like really dismiss those. I like to see ones with a little bit of a body in it at least. Okay, but you could possibly still go ahead for something like that. Go in on the new bar and target like the lower of the band. However, when you take a look at this red bar right here, you want to immediately, okay, grab a hold of your crosshair tool out right here, which is right next door to your cursor black icon on your MT4 trading platform, and go ahead and see where this red candle bar actually appears within the accelerator oscillator. Okay, and you can see that it's actually on a green bar, so that's no good. That's a no trade. Okay, here is another one right here. It sits inside the two upper bands. It actually closes inside the two upper bands, and it also lines up with the red bar below the vertical scale. That's awesome. That's what we want. Okay, so then we go ahead and place our stop loss 1 pip above the high of the previous high. Yeah, and then we go ahead and we go in short right here on this blue bar. Okay, so our stop loss is going to be 47.4 pips. Okay, and let's go ahead and see how far it is to that lower band, and we can see that lower band's 32. Okay, it's just a little bit under 1-to-1 ratio, but here's the thing, we're in an uptrend. Okay, so that's something else that you really need to consider. Do you really want to fight the trend, or do you want to be sensible and only go with the trend? I think you would rather go with the latter, right? You'd rather be sensible regardless of how many times signals come up for a short trade in an upwards trend. Okay, you can see, look at this line, you can see it's going up, it's not coming down, right? Okay, so have that thought process in your mind and understand that it could possibly reverse and go back the other way. Okay, there are some candle formations in there if you're advanced enough to know about candle formations that shows that the sentiment is over. Okay, just maybe temporarily that the sentiment is over for going up, but you could go ahead and apply those kind of risk elements into your trading accordingly if you are comfortable with those. I'm not advising that you go ahead and put a short trade in an upwards trend. I'd rather go ahead and actually do a buy trade, something like this, where the market's starting to go back up. Okay, you can see that previously that the line is going up here despite this little down bit area. Okay. Alright, so there is a sell trade opportunity there, and you can see indeed it does hit our take profit target. Alright, let's take you back and give you one quick more example. Here is another sell trade opportunity. Now this one here, again, although I've just said, just previously, don't fight a sell trade opportunity in an upwards trend, but again, these kind of signals do come off very well, more often than not, but I'm not going to write that in concrete. Again, keep yourself diligent at all times, and I don't I'm not going to be reliable for any wins that you make from this strategy, and also conversely I'm not going to take any responsibility for any losses that you make. You are solely responsible for your own decisions. Okay, this is just merely an educational video, hoping that you can give you a little bit more insight on when and when not to actually open a trade. This particular trade signal right here happens below the signal, below the vertical scale for the awesome oscillator. That will be good in my books, and I'll go ahead and take that, plus I'll do some candlestick analysis to try and confirm whether that trend is over. And yes, I will go ahead and I'll actually go ahead and put in a sell trade opportunity here. Just because I may do it this way doesn't necessarily mean that you should do it that way. Your stop loss should actually be 1 pip above the high of the previous high, which is right there. We calculate the pip difference between there and our open price, which is 40 pips or so. And our first take profit target will be either the first lower band of the envelopes or the lower one of the envelopes. Either is fine, it's completely up to you. Let's say that we did it basically on this area right here on the lower blue part of the band. We calculate that difference right there, and we're looking at 48 pips. So it's just a little bit over 1 to 1. You'll also may notice that a lot of these trades will actually come in and break a profit in about an hour to 2 hours. Yeah, so give that a try, see how you get on. Okay, so thank you very much for watching, and I will see you very soon. Bye for now.